Welcome back to another video for HarborFinancialOnline.com. Today we're going to be talking about the MACRS Depreciation Table, and I'm going to explain to you guys how the MACRS Depreciation works and some of the rules that are required that you have to follow to get this write-off. So the MACRS Depreciation, this is a modified accelerated cost recovery system. It's the current method of calculating the accelerated asset depreciation. Now that's a very long sentence. I'm going to explain this to you guys and make it much easier. But in a technical way, that's what it is. MACRS did replace MACRS in 1986 as part of a tax reform act that was passed. MACRS allows for more recovery early in the life of that asset, meaning you can write it off quicker. In simple terms, what I mean by this is, say you buy a piece of equipment that's $5,000. You can fully depreciate that $5,000 now quicker with MACRS versus the ACRS. So that's how that works. Now at any point during this video, you can stop it and check out our website, HarborFinancialOnline.com. Through our site, you can put in the information you're going to learn in this video and see how it's going to affect your business taxes. So I highly recommend that either through the video, you could pause it, or at the end. Now it's important to remember that not all assets can be depreciated. I have other videos that will cover which assets can be depreciated and which ones can't. So that's very important to remember. Not everything you buy can be depreciated, and a lot of people get that confused. Under MACRS, you can depreciate items in a span of 3 to 50 years, so it's just going to be based on that item. So it can, that's a pretty wide time span there. In the 3 years, if you can depreciate an item in 3 years, that means you're going to have a lot of deductions each year in those 3 years, a big amount. To qualify for MACRS, you must meet some basic criteria, and I'm going to cover these few areas. The property must be able to be fully depreciated under 20 years with normal depreciation rules. So what I mean by this, step aside from MACRS, and if you're to follow a traditional depreciation method, that item has to qualify to be depreciated in 20 years or less. So it can't be an item that's going to be depreciated and beyond that 20-year rule. So that's very important to remember. The use of the property you're depreciating must be in line with what your business does. Now, I just put here as a joke. It can't be your pleasure boat. It has to be something that ties to your business, something you actually do use in your business. So don't get caught up in that. Make sure it's a legitimate asset that you're putting on there. The property the property, same thing here, must have been purchased from 2008 to 2012. You're going to need to have a receipt with a date to prove that. If you bought the item just from someone you know, it's kind of a handshake deal, you still paid for it, you're going to want a receipt with a date on there and have it signed, is what I would recommend. Now the property must have been placed in service between 2008 and 2012. So in that time span, it has to be placed in service and being used. Now what I want to do is take you to our website real quick. This is HarborFinancialOnline.com right here. We have a lot of articles on business tax here, and we have other posts on business tax. We have a wealth of information here that's completely free that I really think you guys should take a look at. Because along with understanding depreciation, you need to understand what other deductions and credits are out there. Depreciation is great. It's a great deduction you can get in your business, but there's so many other areas that we talk about in our website here and on our videos through YouTube. So if I were you, go to YouTube, put it in search term under our channel for depreciation. You're going to see more videos under this area, which I think would be worth your time looking at. Okay, well, that's the main areas of the MACRS depreciation. You can go online through our site and get that table if you want. I didn't want to talk specifically just about the table here. That's something you can view quick and easy on your own through our site, harborfinancialonline.com. Again, if you do your taxes online, it's automatically going to pull that information from the MACRS depreciation table, so you don't have to worry about that. So thank you for watching the video. I hope you check out our website and watch some of our other videos. Thanks.